Yo, what's going on everybody? Welcome into today's video. I'm going to be showing you guys how you're going to be trading all-time highs, okay? So obviously, this is extremely important because we are at a period in time in the market where we do not have enough historical data to really base our analysis off of, okay? And what I mean by that is that when we're at all-time highs, you're trading into oblivion, okay? But there is ways that you can do this strategically so you can avoid taking unnecessary losses and just trading this the right way. Okay, so especially this goes out for those people who just started trading and have not traded in all-time highs territory before. This is for you, and even the people who have and are just looking to, get a better edge on the market during this time period, this video is for you. So without further ado, let's go ahead and get into this video. But before I do, there's one spot left in the one-on-one mentorship program where we do not stop working until you get a payout. If that interests you or if that's something you need, it is the first link in the description. You just click below and basically book a call, and then we'll get on the phone and see if you qualify. So without further ado, let's go ahead and get into this video. Alrighty, so when we do go to check the daily time frame, we are at all-time highs, as you can see right here. For some reason, I forgot to change my line color, but there we go. So yeah, we are at all-time highs, meaning we have to basically trade differently, and let me show you why. Up until this candle right here, we basically had targets. We had previous historical price points to use as reference. So right here we had this level of liquidity, and then we had this all-time highs level of liquidity. But now we are at the highest point the NASDAQ has ever reached, meaning we don't have any more data to the left of us, which is extremely important because we need the data over here. Okay, so I don't know why it keeps resetting my drawing color. There we go. So yeah, so we don't have any historical data to the left of us at this point, other than what has, been below us. So yeah, we're at a point where there's literally nothing to the left of us at this point, as you can see. Everything has already been swept, and we are creating new data in new territory. So the biggest mistake I see people make is that people are just going to straight up just try to short this, okay? Well, we just swept all-time highs. We're gonna go lower. Yes, but in certain conditions. So one thing I learned, when I was unprofitable, I used to really believe that the market could do something like this. We could sweep out a level and it could be like all-time highs and it would just dump. The market is not going to have these pinpoint reversals every time price hits a pool of liquidity. That's why we see here we didn't get a reversal until we swept out this low. And then notice how every single time we have a high, like right here, when we created this high in the market, I'll even zoom in, we didn't reverse off of this. We're not reversing at every single pool of liquidity because the market has to expand somewhere. There has to always be some sort of expansion on the higher time frame in the bigger picture of things. And too many of you guys are stuck in this, basically, this mindset where, oh, we just need to keep looking for reversals. This is not the time to do that. We are going to be looking for continuation trades long. So, I mean, you think, okay, we're basically in a bull run at this point, and you're thinking, oh, just, buy longs at any point. No. What you're going to look for are these three things. So let's go ahead and write it out. 3 things to look for. Okay, I know you can't see that, but bang, now you can. All right, you were going to be looking for, you're going to be looking for lower liquidity. When I say lower liquidity, I mean a liquidity that is under the current market price. Next, high time frame fair value gaps. These are going to be the most important here, by the way. So these high time frame fair value gaps are basically going to boost your win rate, and it's going to make things very obvious. Okay, and we're going to show examples here in a minute, but this is really the most important. And then the next thing is going to be market structure shift. Okay, and you're probably wondering, wow, this seems kind of out of place here. We have lower liquidity, high time frame fair value gaps, and market structure shifts. And the reason market structure shifts are going to be so important in all-time highs territory is because if the market does something like this, we get a market structure shift to the upside, and you still have like this short bias down here, and the market is telling you that price is bullish, you don't want to get screwed over because your analysis is wrong. You need to be focusing on market structure shifts. You have to make sure you're always paying attention to market structure, as in it's most likely always going to be bullish for, the near future. So let's actually get into some examples here. First of all, let's just do an analysis here. So this video is going to be coming out before next week. Today is 4th of July, and this can be even a little bit of a projection for next week. First of all, you're going to be looking for fair value gaps that have not been traded into. So right here, this would not be valid because look how price already traded into it right here. You want gaps that are unmitigated. Okay, so when's the nearest one? Well, we have a high time frame daily fair value gap right here. So what I want to look for is I want to look for price to potentially trade lower into this gap, but I'm not looking to short to this gap. That's very important. Okay, and when we look here, we notice there is a fairly big range from current price. It's around 500 points. I'm not looking to short to this gap. Okay, even though it is a draw on liquidity, I want to see price trade into it first. You want to see a retracement. Basically, your entire framework for trading all-time highs needs to look like this. Wait for the market to retrace into a high time frame fair value gap or some sort of external range liquidity that is lower, not higher. And when you see price trade into it, you want to look for some sort of rejection. But most importantly, when you wait for this retracement, you're now creating historical data to the left of you. So notice how when we zoom out, we're at a point in time where there's no historical data to the left of us. Everything has been crossed over. Okay, we are at all-time highs. There's no previous historical data to the left of us at these current price levels. So when you wait for the retracement, you're giving yourself targets because now when price pulls down, well, we're leaving behind liquidity all throughout. Okay, so we're leaving behind these internal and external draws on liquidity. So when price does trade lower into this gap, we will have targets. Okay, super, super, super important. You do not want to mess this up, guys. Seriously pay attention to this here. So yeah, your entire framework should look something like this. Look for an unmitigated fair value gap. Okay, so we have the daily. I want to see price trade into the daily. Create some sort of inverse fair value gap. Okay. And I know there's a lot of boxes, so I'm just going to start moving them. So we're going to look for an IFEG, okay? We want to wait for the close above it. Oops, we want to wait for the close above it. We're going to look for a pullback, and then price to trade higher, creating a market structure shift. So we're adding all of it together. I know this might look confusing, but it is hard to basically show examples with this because it hasn't happened yet. But this is how I will be taking trading. This is the approach I will be taking with this. This is what I'll be looking for basically every day. But here's what's important. It might take literally days for price to trade back into this unmitigated gap because it is like 500 something points away. Yeah, 534 points away. So here's what you need to do next. Drop to the 4 hour. 4 hour gives us, more of a story. Remember when we had it at the top, I'm not sure if it's still there, I might have deleted it. But we're also going to be looking for draws on liquidity. So right here we have this very obvious swing low. Right here we notice that this low got taken out, and this one got taken out as well. We're leaving this behind. Okay, so I want to see how price reacts to this. In my opinion, I think if we can get a close below this level, price will then go towards here. Okay. But I'm not looking to short. I'm simply looking to take longs. So on the hourly time frame, we see, boom, another fair value gap here. This one, pretty large gap. So I want to see, how does price react? So you're not just trying to blindly take trades off of this. You want to see how price reacts. So if price wants to dump into the level, but then immediately pulls back sharp and creates an inverse and maybe a CISD, bang, okay? That's super important. You want to basically look at how price is reacting to trading into these levels. You don't just want to blindly price traded into here long. No, you have to wait for some sort of confirmation, which is what I teach on this channel. I teach in the inner circle and everything. Okay, inverse fair value gaps, change in the state of delivery, and market structure shifts. So I do want to touch on market structure shifts now. So these are easiest to find on lower time frames. Let's do it here. So this is what you're going to be looking for. Okay, act like this this is like some all-time highs work here. This is the exact approach I want you to take, and this is following my complete strategy. This is the exact approach I want you to take into trading all-time highs and even just trading in general. Okay, we have our draw on liquidity right here. All right, so this is showing an example with a draw on liquidity. And then I think that kind of spoils what happens if you look at that daily, but yeah. We have our draw on liquidity. Let's go to the 5-minute to get this all on one screen. All right, I want to wait for price to sweep out this level. So meaning I just want to see price sweep under it. Bang. Okay. Notice right here, we're wicking it pretty hard. We're showing a little bit of resistance already. Okay. So I'm looking here and I say, okay, we don't have any fair value gaps really left behind in this leg. So I'm going to scale down the time frame to 3-minute. And I see we have a 3-minute bearish fair value gap. I want to see price close above this gap. Okay, we got the close, I'm entered. So you enter your position at the close above the fair value gap with your stop loss at the low. The low that you're going to be using your stop loss at is going to be the low that sweeps liquidity and starts the new reversal. This is important because price will sometimes like to trade back into this fair value gap, as I like to use these as support zones. I like to drag these out to the right for future reference, but price could trade back lower under this inverse fair value gap. That's very important to note because a lot of people who teach inverses, they tell you, oh, just put your stop loss down here below the gap. No, that will not cut it. Risk a little bit more, and I promise the rewards will be insane. So in this case, first of all, we have this prominent swing high right here. We do want to be using this as a take profit level, but also a break even. So we're basically going to just make this our break even here. And let's just say we're going to take partial, so TP1, 2. All right, now what am I looking for? Well, we notice, and let me just clear off the screen a little bit. We notice right here that we create a swing high, okay? So what price does is we sweep liquidity, we pull up, and then immediately pull back down. This is strategic. The reason why is because we're creating a market structure shift. Okay? So on top of this, you have a market structure shift and an inverse fair value gap. Two things that are telling you that market order delivery has been shifted. And on top of that, we have a change in the state of delivery, which is happening right here. So the start of the bearish sequence that sweeps liquidity is right here. Bang. CISD. Everything is telling you that price will turn bearish after we just swept this insane pool of liquidity. We have an inverse fair value gap, we have a market structure shift, and we have a change in the state of delivery with a target at external range liquidity. So let's see how basically price trades. Okay. There's our break even and our TP1. Now notice how, this is very important, this break even TP1 is set there for a reason. It's set at this swing high. But notice, we used this lower time frame swing high for a market structure shift. Well, if we scale up on the higher time frame, we're going to look for, let's go like the 5-minute, makes it easier. We're going to look at this as like an additional market structure shift for a longer term bias, if that makes sense. Okay, some people might not trade it this way, but this is how I trade it. Okay, this is a swing high placed in a downtrend. This is the better one down here, but this is just a shape bias. Okay, so as you can see, now what's left is going to be buy side liquidity up here. And yeah, let's see. Bang, take profit hit. And price never would have traded back to your break even. So yeah, that is the complete strategy that I use every single day in the market. That is what I look for, and that is how I'm going to be trading all-time highs and making thousands and thousands of dollars every week. Okay, this is extremely important to learn. I want you to rewatch this video. I want you to take notes, and most importantly, if you do have questions, I want you to join the free Discord in the link in the description, and I want you to ask as many questions as you have, and I will help you. Okay, too many people are afraid to ask questions. I will genuinely help you. And if for whatever reason I was busy, somebody else on the server will help you. One of my mentees. Okay, so this is how I trade. This is how I want you to trade. And I promise that if you give this a try, this will boost your win rate and boost the money in your bank account. This is that good. This is the holy grail strategy. As you can see, this is a 4 risk to reward trade with a high win rate. This happens a lot. All you have to do is be patient and wait for the setup to form. And like I said at the beginning of the video, the one-on-one mentorship program has 1 spot left. That's not marketing. I genuinely am only accepting 15 spots, and there's 14 that have been filled. Okay. Like I said, it's not marketing. I can't handle taking more than 15 students as it is a one-on-one program. There is no groups involved. Okay. Everything is personal. It's a personalized guide to get you to profitability, and the thing is, I'm willing to make a guarantee that nobody else can, and that is we do not stop working until you get a payout. It's the first link in the description. You're going to book a call and see if you qualify for one-on-one mentorship. So yeah, I hope you guys enjoyed this video. It was a really good one, and yeah, I will see you guys in the next one. Peace.